In this video, I'm going to show you how easy trading can be if you know where to take a trade from and if you know where to take a trade to. Because in the end, that's what it's all about, taking a part of the move. Trades that I've taken over the past few weeks where I put this principle into practice. As you can see, every trade is taken from point A to point B, even though the bias was maybe different. So in this video, I'm going to show you how to determine your bias, where to take a trade from, where to take a trade to, and how to maximize your profits. Let's get into it. By the way, for the people that don't know, I just launched a school community. In this community, I'm basically placing everything that I'm seeing on a weekly basis. Like here I say, I missed 4 trades this week, was able to capitalize after all on the trade, and I basically took down the trade that I took, and it's given me that 1/2. It's a closed community, but it's free. It is a place where we help each other, where you can connect with like-minded individuals, and where you can basically talk to me, since for me it's just so easy accessible. I would say if you're serious about getting profitable, a good community around you is very, very crucial. Okay, so right here we are on the Euro chart. So what I always do, I always start on the weekly. Why do I always start on the weekly time frame? Because it is just the most beneficial time frame that we have and the most strong time frame that we can analyze. So right now, what can we see? We can see, okay, price is in a decline recently, but where does this come from? So right here, price had taken out this previous low right here, and this showed me that price on the weekly was ready to turn around. When we were here, I was telling basically everyone around me, we are turning around right now, most probably to create a pullback. So where are we creating a pullback to? If we would look in this price leg, I would look for a point of interest area, and this is already where it starts. Take a trade from point A to point B. This right here being point A, and this right here being point B. Now you probably tell me, Jody, how did you come to point B? Are you trading a trade from point A to point B and that's it? No, I have these areas so that I know where to take a trade from, where to take trades to. How did I come to point B? If I look at this price leg, there is no fair value gap, there is no order block, except for this little bit of an imbalance left up here. So this tells me, okay, there is probability that price is going to this fair value gap up here and fill this all the way up. Now, okay, of course, price did this, but how can we trade this effectively when we are in between point A and point B? We know, okay, overall, we are most probably going to trade up to this point and then turn around, but how do we actually trade this? Do we trade a trade from point A and hold it all the way up to point B? This is exactly what you can do on the weekly time frame, but I'm not. I'm not going to hold a trade for 4 months, or in this case, it was 2 months. I want to take parts of the move. And that is then where we are going to zoom in. So we're going to go one time frame lower, the daily. We have in mind that we want to turn around from here and we want to take trades all the way up to this point. So what are we going to do? We are going to search for the best buy positions. That is point 1. First of all, we are in the zone. What do we want to see first? If we purely would trade the daily, we want to see a market structure shift. That happens right here. Then where is the best place to buy from? This order block down here. As you can see, it gets stepped in. Then again, what is the place we are going to trade to? The previous highs. Where I'm going to mark all of this for you guys so that it's easier to see. And we're going to call this a break of structure. Since we already had the market structure shift, we're now just breaking the current structure. Then again, what is the best place to buy? This order block down here. And we are basically repeating this process until we are all the way up there. As you can see, price always makes a deep retracement and then goes up higher to break the previous high, going further towards the goal of reaching point B. Now we reach point B, what happens? We have a huge rejection downwards. Are we still going to be searching for buy positions? No, most likely not, because the move is done. Point A to point B is done. Now we have a new point A, and that was our previous point B. What now becomes our new point B? If we are using weekly market structure, we are saying our new point B is underneath these lows. Since we broke market structure right here on a weekly, we did not break market structure bullish on a weekly, so we're still bearish. What does that mean? Bearish means we are breaking previous lows. So of course, the first point B will be this one right here. It's a very easy target. But the second and overall point B, and this is a target for most probably 2 to 3 months again, like the first price tag was, is this one right here. So how do we fully capitalize on all of these moves? Now let's go to the 4 hour. On the 4 hour, you have to see it like this. I have to give a shout out to Wakar for this one. He says the 1 minute is just a high definition version of the higher time frames. And I see this with every zoom in of every time frame. So the 4 hour is a high definition version of the daily is a high definition version of the weekly. And it just means that you have a lot more price action to go from and a lot more price action to work with. Even though it is the same price action, you have more order blocks, more fair value gaps. So you have more room to find point of interest areas and to find point of sabotage areas, and basically point A's and point B's. So I'm going to remark the essential points on the weekly since I deleted them. So this was a very essential point, and this was a very essential point. So this was the market structure shift. This was the fair value gap. Then on the daily, we need to have some important points on the daily. So on the daily, I have this fair value gap up here. And I still believe this is a very important point for market to tend to. But for some reason, we did not reach it. I was pretty surprised by that. Maybe we're still going up afterwards. Who knows, of course. I'm not here saying that I know what the market does every single time. But this fair value gap open with these two double tops right here open. For me, it was just a perfect point of liquidity. Like I said, maybe we are going to bounce from here, then take it out, then go lower. But yeah, how it looks right now, I think we're just going down in a straight line to these lows, as it is just so aggressively going downwards right now on the daily. So this is a daily fair value gap, a very important point daily wise. So now we are on a 4 hour. What are important points on a 4 hour? Point of interest areas. These highs right here. This is buy side liquidity. And then you have like an order block zone up here on a 4 hour. Okay, so for now I'm just marking up the charts. I'm pulling in daily points and putting in 4 hour points, buy side liquidity, sell side liquidity, because these are very crucial points where we can trade to or where we can trade from point A's and point B's. So in this example right here, we took out sell side liquidity. So this was my point B for a long time. And why was it my point B? Because this was my point A. Remember, we traded price all the way up to this weekly fair value gap. This was our point A. Now price tumbled down. And where is it going to? To the first low on a 4 hour, on a daily, that broke the previous high right here. And as you can see, that's that low. I was basically trading price downwards all the way up to point B. Now we're at point B. What happens now? Point B becomes your point A. So point B becomes your point A. What is our new point B? The weekly has done its job in delivering to point B. And what was the weekly trend overall? It was short. So is it logical that price, the new point B, is going to be above the previous point A? No, it's not. Because we want to see a retracement of this move and not a turnaround. So we don't want to see a market structure shift happen on the weekly. So this point must not get broken whatsoever. So where is our point B? Now you're going to mark, and this can be a difficult one because in a retracement you have several point Bs. And basically these are several points that price can turn around from. So this can be your first point B, this can be your second point B, this can be your third point B, and even this one can be a point B, all the way up to there, as long as you don't break this previous point A. But by knowing this, you can see what price does when it reacts to certain levels. It consolidated for a little bit right here, but that's all it did. Then we came to the second point B, right here. What did price? Price rejected it. And the second and the third one are very close to each other. So let's say this is just the second one all together. Price rejected it, came tumbling lower. Where did it go lower to? And this then again becomes a new point A to point B on a lower time frame. As we can see right here, we have a 4 hour order block, and I was doing exactly the same thing right here. I'm going to zoom in a second, but it's important to know the high time frames first so that you can then go lower to the lower time frames, because you will have a point A and point B scenario on every single time frame. But the higher time frames are of course stronger, so it is very important to know where you are on the markets higher time frame. So then right here we rejected it, we made a new lower high, we made a new lower low, according to this one. Then we made a new lower low from the previous price leg, came up higher right here, and then we tumbled down lower. So if we're going to zoom in on this little price action moves right here, what can we see? Price comes in here, and I'm even going to zoom into the 15-minute right away. I've made a video about this, how I trade 1-minute charts, and I use this before I go over to my 1-minute chart trading. I always use this, my top-down analysis. You see price comes inside of this area, it rejects. That's a very good solid point already. Then news kicks in, takes out liquidity right here, comes down again, and then it starts consolidating. It breaks out of this consolidation zone. It's always a good and valid confluence. Breaks out of it. Where does it most probably retrace to? In this move right now, how I would trade it on a lower time frame, most probably right here. Because you have your consolidation zone, you have your break and your retest, and then your continuation. And that's exactly what happened here. You have your consolidation zone, your break, your retest, and your continuation. Where does it go to? To that 4-hour order block right here. 4-hour OB. Price is at 4-hour OB. Where is it now most probably going to? I would say it's more probably going to point B right here. If it breaks this one, it's most probably going to somewhere up here. Because if it's going to break this one, it's going to break these highs. And then it's probably taking, it's taking liquidity by doing this, taking these highs. So it's going to strand somewhere up here. You have some kind of order block up here that made a huge reaction downwards, causing this consolidation zone. So it's most probably going to strand somewhere up here. If it doesn't, it's going to break these highs, and again, it's going to change structure, it's going to change directions on a high time frame, and you don't want that. So then that happens, we have a rejection. Where is this going to? It is going to continue the higher time frame trend. So it's going to target these lows. This lowest point that broke the highs. So this one is the low that has to be targeted. And that happened. We are now in this 4-hour OB. What is now most likely to happen? To create a retracement. As you can see right here, the retracement started, but it did not come far. Where did it go to? These previous lows down here. Then price comes lower again. Let's go to a 1-hour. Price comes lower again, right here, taking out this liquidity. Price comes up, this OB comes lower again, creating a higher low. News pushed it higher. This was FOMC, pushed it higher, all the way up to the highest fair value gap that we had left. Highest fair value gap, highest OB. So this was the most discounted place to sell. The best place possible in this scenario to sell was up here. And even though it seemed pretty impossible when we were down here, news made it happen that we were able to sell from here. Now, let's say we are in this zone up here. What are you doing? We are zooming in. So you zoom in. And now what happens? Like the most beautiful thing, and what I've been teaching you in the previous videos, happens. Consolidation in this point of interest area. Look what happens at 8 a.m. And you will see what 8 a.m. is in New York time, because I'm trading UTC +1. So it's a little bit different in New York time, but it is Frankfurt open anyway. And if you have seen the 1-minute video, I wait for a liquidity grab between 8 and 11 a.m. UTC +1. So what happens at 8 a.m.? Liquidity grab. We take out the highs. What happens then? Market structure shift. Where am I entering? Exactly right here. So then my stops above this one. And in theory right now, of course I didn't do this, but I'm saying of course, in theory I should have done this because I knew this was going to happen. You can target these lows down here. Because you know, okay, this is the best place to sell. And what is this just doing? It is a continuation. It is a continuation from point A, right? This point B became now point A to point B, right here. And that's all it is. You have to see, okay, where's my point A, where's my point B, and how am I capitalizing on this? And then when price comes here, and in this scenario, even because it is this continuation, we could say these lows are point B. So this is now my point A. Where will my point B be? And in this scenario, it will most probably be somewhere around here. You have your order block, you have your value gap. So these are very good new point B areas. Guys, this is a little bit how to read the markets, create a story for yourself, find direction by using these point of interest areas. And I hope this was clear. I hope this was clear enough. I hope you enjoyed this video. I hope you learned a thing or two. If you did, please subscribe and leave a like. I would highly appreciate that. And I will see you in the next one. Bye bye, guys.